We are going to go ahead and get started. We've got our amazing Sarah Dodson here to go over insurance and what does that look like from a real estate transaction? How can we be better prepared? How can we, other than, how can we better serve our clients other than just referring them to the amazing Sarah Dodson and her team? So we are going to go over that and what does all that look like. So I'm going to hand over the reins to Sarah here in just a moment. If you guys want to come here in person, we are at the Virginia Beach office, and we've actually got papers that you can look at and review and mark up and whatever. If not, then Sarah's got her screen shared here with us, so that way we can go over it.
Yeah.
All right.
All right, now
I'll start my video. And then let me turn my sound back on. Okay, can everybody hear me? I think, okay, we're just gonna go with yes. And I'm actually gonna grab one of these for myself right now. How is everyone doing this morning?
Great.
Good? Okay, I have a question for everybody. Who has actually taken the time to look over their homeowners declarations page or their auto insurance declarations page? So we're going to go over the home one first, and the first one is just a one pager. This declarations page is what is sent over to Cragen and his underwriting team when you have a buyer that is under contract and getting ready to close on a home. So what I really wanted to do is just go through the different coverages, what they mean, and things for you all and Cragen and any other loan officers, what to look for on here is what could be like a red flag for your client that maybe they don't quite understand. So this first one, this is the home deck page. Again, this is what is sent to the mortgage company and closing agency in order to close on the home. And I've got it shared on my screen here for you all online. I hope you can see it well. I'm trying to zoom in for you. I'm trying to minimize that, but I can't. All right, so hopefully everybody can see. So obviously the first part, it's the name and the address of the insured and the address of the home that they're buying. You always want that to match unless this is an investment property. That's the time it would be different where the insured's address is their primary residence, but the insured location is, secondary home investment property. That's the only time you would want them to not match. And then you'll policy period right here, the effective date, that is super important on the, in order to get to closing, because that date needs to match the closing date. Otherwise, underwriting on the mortgage side, right, Cragen, will kick it back and be like, no, this date, that right now it says it's effective September 21. Now we're closing September 25th. We got to go in and change the closing date. And that happens all the time. Closings get pushed, moved forward, whatever. And, we're fortunate we're able to accommodate and go in there and change the closing date or rewrite the policy for the customer. So those are some things at the top to be aware of: name and address of the insured and the property address of the insured location matching if it's their primary residence, can be different if it's an investment or secondary home, and then the effective date being the same as the closing date. So then we get down and we look at the different coverages. So you have coverage A, which is the dwelling coverage. So that is the amount that your home is insured for. That is the replacement cost value. So our agents and insurance companies, they do what is called a replacement cost estimator, and they put in all of the variables of the home to come up with this replacement cost. So again, this is if you were to experience a complete loss, this is what it would take to rebuild this home back to where it is today. And I am going to tell you guys, these dwelling coverages are starting to go up. Inflation, the cost of building materials is a lot more expensive now than it used to be. This is going to be reflected on renewals of insurance policies as well, because the insurance companies will go in and recalculate that number to make sure you're appropriately insured. I know sometimes people might think, oh my God, the insurance companies, they're crooks. They just want more money. No, we want to make sure that you can rebuild your home to what it is today. Because I mean, God forbid you experience a fire and have a total loss, and then you don't have enough money to build your houses to what it is today. So yes, Cragen.
It also affects your escrows, which affects your cash to close.
Your cash to close.
So this can, when we talk about closing costs, we always talk about closing costs in here. And I don't know if they can hear me or not, but when we talk about closing costs and closing cost percentages, we always say, you know, $300,000 home, you're looking at about 3.3% of closing costs. If your insurance goes up by $5 a month, they collect for 15 months of insurance up front. So 25 times 15 is what? I don't know.
I'm just a numbers guy. I'm kidding.
15 times 25.
Yeah,
I mean, that's
it's a lot.
That's not even an expensive house. That's not even like a $700,000 house. That's like a $350,000. You know, so that will make that percentage go up. So when you all look at the CD or the Alta, you're like, wow, I feel like my customer or my client got, you know, whatever they were done a disservice by somebody, and they ultimately think officer because we're the last line of defense and the first line of defense. And everybody in between, whether it be Sarah or the settlement company, they're just the worker bees in a sense. No disrespect.
None taken. I am a worker bee.
But no, they always look at us as like the fall guy or girl. So my point is that just understand with the way that things are going, if you can also help us out and help tell your clients that or I say tell your clients, I talk off the edge if they bought homes before and they're saying, wow, this is a lot. But I know a lot of seasoned agents will be like, I just had one tell me, that seems like a pretty high closing cost. And I was like, well, and then I gave her the spiel and she's like, oh, well, that makes sense. So just understand when things go up, taxes go up.
Everything. It impacts everything.
Your percentage of closing costs are also going to go up.
Yeah. Impacts everything. It's not just the groceries in the grocery store or the goods, you know, that you're buying. It impacts everything. So coverage A dwelling, again, this is not the appraisal or the value of your home. This does not take into consideration the land of the home. Sometimes, you know, people are purchasing home on the water, and let's say the purchase is, you know, 1.5 million. But the home, we go in and let's say like, you know, 2,200 square feet, they're paying more for the location than the home. The replacement cost of that is not going to be 1.5 million. So again, just things to keep in mind. They're not all, the dwelling coverage is not always going to match what the customer or the buyer is paying for the home, or like the value of the home. It is strictly replacement cost, what it would take to rebuild your home event of a total loss. It's called indemnification.
Brandon's told me about brick homes too.
Yeah.
Brick homes are more expensive.
Brick homes are more expensive, but they're also more sound.
Yeah.
So
do you find 1-story or 2-story homes typically have a higher replacement cost?
I mean, again, it depends on the size of the home. I mean, a 2-story home could be 1,500 square feet. You could have a 1-story home that's 2,500 square feet. Yeah. So yeah,
if like so 3-bedroom, 2-bath, 2-story, 1,500 square feet.
Yeah.
3-bedroom, 2-bath, 1,500 square foot ranch. Which one is going to have the possible higher?
That's a good question. I've never thought about that. I mean, I would say probably the 2-story would cost a little more because you've got the steps and extra structure to build that 2nd story. And they do ask how many stories is the home that goes into one of the factors. So I would imagine that, yeah, it increases the rate or the rebuild cost. Great question. Hold on, I'm gonna get Christy really quick because she had her hand raised.
Oh yeah. So you were saying that's just to do a straight replacement. What about putting someone, does that then also incorporate, which the answer is no, but the person like living in a hotel until their house is—
Yep, I'm gonna get all down to all that. Yep. The other parts of it, and really good things to look forward to. Great question. Yes.
I was gonna say, rather than stories, I feel like foundation plays more into effect.
It does,
like,
that the foundation does too.
So,
Slab is going to make it more expensive. For sure. Yeah, because I mean, like I would say like drilling through stuff and everything. Yeah, I think crawl space, you see more crawl space now than you do slab, especially with rising sea tide or rising sea level and flood zones and mapping, coming into play. I didn't even do a flood deck page. That's a whole nother class we could do and go down. But yeah, good catch. Okay, so we've got your dwelling coverage. That is the home itself and any attached structures to the home, deck, attached garage, etc. So then you've got coverage B, which is other structures on the property. And that is 10% of the dwelling coverages. So if you look at your deck page and you see these A, B, C, D, E, or actually just A, he didn't put personal property in here. I don't know why that didn't happen, but anyway, all of these numbers are based off of a percentage of the dwelling coverage. So coverage B, other structures, is 10% of coverage A, and that provides coverages for any additional structures on your property that are not attached to the home: detached shed, detached garage, fencing, gazebo, like whatever it is that's like comes with the home that is detached that qualifies for insurance. That is what that's going to go under. So you have a detached shed, you experience a really bad storm, a tree falls on it and damages it. That coverage is going to go towards the repair or replacement of that building. Coverage C is personal property. When I say personal property, that is your belongings that you bring into the home. And I like for a way to think about it, like what exactly does personal property mean? Let's say you take your home and flip it upside down and shake it. Everything that like falls out of the home is considered personal property. So if it's not attached or, fixated is not the right word. Yeah, fixed to the home, then that is not considered personal property. That's considered part of the home. So like a stove, refrigerator, all of that stuff. Typically, the personal property is 50% of the dwelling coverage, which again, I don't know why they didn't put this in here for me, but I'll just do the math really quick. Bringing out the calculator for this. This number is way too high for me to do it on my own. $908,000 that would cover your personal belongings. So I mean, that does seem really high, but if someone is purchasing a $1.8 million house, it's very safe to say that they've got luxury items they're bringing into this house, really expensive rugs, really expensive furniture. So that stuff adds up. And especially as costs continue to rise. And this is like the 10%, the 50%, and then the loss of use 10%, which I thought normally it was 20%, but whatever. That's automatically included in the premium. So if you could raise up those percentages if you wanted to. Let's say you had a lot of additional other structures, you could bump that up to 20% to have more coverage. It would impact the premium a little bit. It's not a whole lot. Same with personal property. You can bump it up to 75%. It doesn't have to be the 50%. And then the loss of use, coverage D, also sometimes known as additional living expenses. This goes to what you were saying, D. So let's say that you experience a fire and the home is unlivable or uninhabitable while it's being repaired or rebuilt, and you don't have anyone to live with, and you need to go live in a hotel for like a month or 2 months in order for your, while you're waiting on your home to be repaired. That's what this money is going towards. Any additional living expenses that you have to take on because you can no longer live in your house because of a covered loss, like a fire or really bad storm damage. And that goes towards like hotel stay, food, anything like that. That's an additional living expense. So groceries, that sort of thing that you can submit to the insurance company, and you've got, you know, $785,000 of coverage for. And it varies from, you know, policy to policy. If this was an investment property or a rental home that you had, anybody have investment properties in here? Yes. Okay. So landlord, you've got a landlord insurance policy. That landlord insurance policy includes loss of use. What that means for you as a landlord or investment property owner is if you experience a covered loss and your tenants have to move out while the home is repaired, you're losing rent. You can use this towards loss of rents. So that's what sometimes it's called loss of rent on landlord policy, a loss of use, but that's what that means for.
Does it also cover putting your tenant up somewhere while the property is being worked on?
No, because they've got additional living expenses on their tenant policy.
Okay.
Hope about that they can use for that instead of the rent.
Now, another quick question, because I had this come up earlier this year where I had a property that had a fire and insurance took care of everything, professional remediation, everything like that. Then went and listed the property. And the new buyers could not get an insurance policy with that same insurance company because of the fire. Is that something that you see happen?
It could happen. I mean, if it's a big loss, when the insurance, you know, carriers are running the clue report, or like an insurance history report, something big like that will show up and it will be flagged, and it could potentially, especially with the same carrier, because they're the ones that paid out on it, keep them from getting insurance or make it harder. Or the insurance company is going to want to know and see that whatever caused the issue has been remediated before they write a policy on it. It's not really going to impact the premium too much for that insurance, the new insured, but they just might have to jump through some hoops to get the coverage.
Yeah, they were just flat out denied. They were like, nope, we're not going to insure this, which I thought was strange, because if you paid somebody to come in and remediate it, then isn't it better than what it was before? So
Yeah, I
that's
mean, fair enough. I don't know why they would make that decision.
That, like, a termite company puts on something, they're like, well, we were the ones that fixed it, so.
Yeah. Well, and you said it was a fire,
Yeah.
not like a pipe leak situation. Okay.
Same thing for oil, the code report, if it comes up, if someone had a major accident, you have the same thing with the code report for an automobile accident, and that they not want to destroy the Honda.
I feel
Yeah.
like an auto insurance is different though, because, or like for like an auto accident would be different, because especially if you were at fault, because you're still the one driving.
Yeah.
But this was an electric fire that was nobody's fault, and
It was an electrical fire, but they went in and fixed it. So I'll ask one of our sales managers about that. That's interesting to me that they, even because they knew it was, unless they were just like, this person was, or this house was a risk, we paid out on it. And maybe this particular company was just being really cautious about who they were rewriting.
Could be.
Yeah.
It was just interesting.
Yeah, that is interesting. All right. So then coverage E, personal liability. That's going to cover your legal expenses if someone other than you or family living in the home is injured on your property. That even means like if someone is trying to break into your home and they like, I don't know, get inside, fall and bust their head, they could sue you. Yeah, it's crazy that can happen, but that's normally not what happens. It's usually like, I don't know, you've got like, maybe you're having a birthday party at your house and a kid like falls, breaks his ankle or something, like they could sue you for liability. So that's why you have to have that. The 500,000 is the max limit, and we always recommend 500,000. It's not going to impact it. Like it's not going to bring the premium down a whole lot by changing it to 300,000, literally just like a few dollars. So we always recommend the 500,000, and then the medical payments, 5,000. Again, that goes towards any medical payments that person has if they, injure themselves on your property. It's going to go towards them. It's not going to go towards you or anyone living in your home. It's for any other person.
Would you not suggest they have a higher?
So, I mean, we always recommend an umbrella policy. That's where that excess would come in. And that's another class we can talk about. You know what? This is good. Like we're gathering up some content for you all. And then loss assessment, that is typically something, I'm glad he put that on here. That's something you want to see on a condo policy. So that's like if there's a condo association and let's say that condo association experiences, you know, some like roof damage and they got to replace the roof. They can come around to the different condo owners and get some, you know, more money for them to go, special assessment to go towards the repair replacement of that roof. Well, let's say they want like $2 or $3 grand, like I don't have that. So we condo policies, I think 1,000 is included. We usually, I know when I wrote insurance, I always did like a high amount of like 5,000 to 10,000. You can go to your insurance company, show the proof that you're being assessed for this amount of money, pay the deductible, and then they'll give you the money to go towards that condo association. So it's not coming out of your pocket.
I didn't know that was a thing.
Mm-hmm.
That's really cool.
Yeah. Cool.
That
People
helps.
are learning something new. All right. Deductibles. This is something that, you know, you really want you to be aware of and your clients to be aware of, loan officers to be aware of. The all other perils deductible. That's also sometimes listed as AOP. That is the deductible they are going to pay if they have any type of loss that's associated with a fire, you know, a bursting pipe, anything non-weather related. On this policy, we have a $5,000 deductible. I know that seems high, but because the insured's policy is like closer to $2 million, it's safe to assume they probably have more money, you know, put away to pay for a $5,000 deductible. Also, they don't want to be filing a claim that's, you know, $1,000 or less, or maybe even in this case, $5,000 or less based on the dwelling coverage. So $5,000 deductible, that will bring the premium down a lot, having a $5,000 deductible. But the one I really want people to pay attention to, and we're going to spend a little bit of time on this, wind, storm, and hail. You'll also sometimes see this as named storm deductible, hurricane deductible. So there's 3 different categories. So the first one, wind, storm, and hail, that is going to encompass any type of weather related claim, thunderstorm, tornado, hurricane, nor'easter, tropical storm. That's any type of weather event. That's what the wind, storm, and hail stands for. Different carriers do it differently. This one, it's a percentage. So with this one, it's 1% of your dwelling coverage. So if this particular insured experiences a loss due to a weather-related event, their deductible is $18,160. That's a lot. But one thing I want you guys to really pay attention to is other companies, that number is higher, 2%, 3%, 5%. Can you imagine 5% of almost $2 million? Like, what do you even do it? Who has that? I don't know. But even on like a house that's like $300,000, $400,000, like a percentage of that, like, you know, 2, 3, and 5% is a lot of money, a lot of money. So that is always something to be aware of. Yes, having those higher deductibles will decrease the premium, but is that buyer gonna be able to pay that deductible if something is to happen? And then they can't use their insurance and they're screwed. So that's the wind, storm, and hail. Sometimes you'll see it as named storm deductible. And again, it can be a 1%, 2%, 3, 5, or a flat rate. We do work with some carriers that have a flat rate. Named storm means that in order for that specific deductible to apply, the storm has to have a name. So typically a tropical storm or a hurricane, Hurricane Isabel, tropical storm, Christy, you know, you just walked in. So what that means is that all other perils deductible will apply to a thunderstorm or a tornado. So if they experience a weather-related claim to anything that's not a named storm, then it just falls under the all other peril and not the named storm. Same for the hurricane. Even it could be a named storm that's a tropical storm. Well, it wouldn't fall under the hurricane deductible. It would fall under the all other perils deductible. In order for a hurricane deductible to apply, it has to be categorized as a hurricane when it hits the land and causes the damage to your home. And that's a 1 through 5 or whatever it is. So really important things to notice. Is it windstorm and hail? Is it named storm? Is it hurricane? If it's hurricane, and it's a higher percentage, that might be a little more digestible and better to have a higher one, because especially here, typically by the time the hurricanes hit us, they've been diminished down to a tropical storm or a named storm. Now, I know that's not all the time, but having a higher hurricane deductible is a little less risky than having a higher percentage wind and hail or named storm deductible. And as far as tight debt to income ratios and getting to the closing table, sometimes, you know, they can't, like the rate's not going to move, right, Craig? And they can't take any hits on the rate. The taxes are what they are. So if you know, we're within like $50 of them qualifying for that home, a lot of times insurance is the area to do that. So we'll go in and raise up the deductible and, you know, make some, you know, strategic moves of coverages and, you know, taking some off at it, whatever it is. We'll do that to get them to closing table, but we first get the buyer's consent and they know what's happening. And 2, we let them know is, you know, once they get like 30 days, 60 days outside of closing, to go back to their insurance agent and change those deductibles and change those coverages. Because it, like, the new premium won't really hit. It won't impact the escrow that way. So, and then if they have a claim, then they don't have a $10,000 deductible. I don't know how often we have had to do that recently, but I know that we can. So,
And it's probably coming.
and it's probably coming. Yeah, right. And that was all I had on this. Something also, I mean, not so much for the agents, but this is more of like a loan officer Cragen thing, the mortgagee clause. That's something we have to declare on the policy as far as the lien holders company information for like payoffs and stuff. Any questions about the deck page?
That mortgagee clause is also another way that we prove that there is not a mortgage on a home that is owned outright as well.
Yeah,
Because if there's no mortgagee clause on that HOI, then obviously there's no mortgage.
right. And
Because
then
they're
it's
not going to, correct me if I'm wrong, Sarah, I'm sorry.
Nope.
You're not going to insure a property and not put a mortgagee clause on there if it is owned outright.
so we'll insure it, but we're not going to put a G clause on
That's
it.
what I'm saying,
Right.
like,
Yeah.
If it
Mhm.
has a mortgage on this property, you're going to put a mortgagee clause. on
Right.
there, I guess. is my
Exactly.
question.
Yep. And they're going to require it. Like if the underwriters will not accept a policy if the mortgagee clause is not on there. If there is a typo, they will not accept it. Like it has to be perfect. So, right. If there's no mortgagee clause, then that typically states that the home is owned outright by the client and tells us how the client is going to be paying for the policy. If there's no mortgagee, you know, there's no escrow, they're paying for it out of pocket. All right, so now I'm going to pull up this auto deck page. Whoops. I think it actually might be in my email. Sorry, y'all, bear with me.
So while you're pulling that up, maybe
Yes.
you or Alex, could answer this. What are some of the things that you see that greatly affect policies as far as homes go? Like things like pools, things like age of roof, things like fences, things like different stuff like that.
I would say for me, it's a lot of cost of materials. So like we're talking about with brick. If they have like a custom made kitchen or bathroom, it's kind of up to the insurance agent. Like I had no idea until I got into insurance. So we're just kind of like going off of the pictures and stuff. So if somebody thinks it looks like it's custom made, then we're just gonna put it's custom made. But there's not like a specific, like you have to hit this mark, but that's gonna raise up the price. And even something, I mean, this is a smaller amount, but like door frames and stuff, like how many doors there are, we have to count those and stuff, and that affects it.
Doors are expensive.
Yeah.
And all the framing and everything
Yeah.
like that goes into it.
So
Mhm.
regardless of if they're fire or not, or just fire, then additionally.
It's just if there's a door, really. We just go through and count it. Yeah, sometimes we even just have to make sure it's up to the amount that it should be. And so we'll just kind of like figure out what to add in there, but whatever it says on that replacement cost estimator, it doesn't really matter. They're not gonna check it by room or something, how much is this kitchen worth, but it's just more of an overall payout. I mean,
Mhm.
right, but I can't think of what's the biggest thing that affects that.
Not so much like the price, but things that they look for as far as qualifications. Roof is huge. Like
Yeah.
they want that roof to be in good condition. If it's not in good condition, they want it repaired. If it's like 20 plus years old, they want it replaced. That is huge. And having an updated roof will help with qualifying and bring the premium down. It will. Pools, it's more of a, is the pool properly fenced? Does it have a diving board? And every carrier is different on whether they'll accept a diving board or a slide that's specific, but all of them want at least a 3-foot high fence around the pool with a lock so people can't get in because it's a liability issue. Someone's kid wanders over into your yard and falls into your pool, you're at risk to use that liability insurance. So pools,
Similar to pools, dogs. We
I was gonna
ask
say
for
dogs.
Every time.
Mhm.
Certain breeds are restricted from certain carriers too, so.
Really?
Yeah.
Yeah,
You have to
it's-
be very upfront and say, we ask pool dogs, trampolines.
Yeah,
I was gonna ask about
trampolines.
trampolines.
Yeah.
Yeah, trampolines. Is there netting around the trampoline? Yeah. Mhm.
Interesting.
Again, because they're taking on this risk. And again, like, let's say this, this home is, they're taking on a $1.8 million risk plus the liability. And, it's not just the 1.8 million, there's a fire, the personal property, all of that. So insurance companies got to be careful and strategic about, the type of risk that they're insuring. But we are an independent agency. We work with over 30 carriers. We got something for everybody.
Yeah, that's why we asked at the start, we try to match with like the perfect insurance
Mhm.
carrier. Now, somebody has a lot of claims in the past and some carriers just won't take them. We have
Yeah.
certain carriers that were like, okay, this is our last scenario, but like.
Yeah.
You have no other choice, sorry.
Yeah.
So I'd say claim history is huge.
Claim
but
history is huge.
sometimes it just goes up too per year and there's really no good reason other than.
The cost of
inflation. Yeah,
materials,
cost of materials.
inflation. I mean, that maybe that specific carrier had to pay out a lot of claims over the year. So that can drive it up too. I mean, people are going to see a rate increase this year. I mean, it's going to happen no matter what company you're with. One quick plug for Prosper. We have an account review team. And if it is like flagged to us, if a policy goes up over a certain percentage at renewal, they'll automatically reshop that for that customer. And if they find something better, reach out to them and let them know, hey, we noticed your renewal with this company is going up to X. We saw that, we reshopped it, we reshopped you at a different company with the same changes. We're never going to sacrifice coverage for our clients, never, at this amount. But just another added value and service. And
That's
typically
incredible.
they're like, oh, thank you.
Well, and that's part of why I love having my clients go to you guys, because you guys don't sacrifice
Mm-mm.
coverage.
No.
Because that's what so many other insurance agencies are doing. There's even a couple of them who are double charging clients on the first month. So the insurance is collected at closing, and then the next day it's charged to the,
What?
it's happened twice now in the past month with one particular insurance provider.
Don't use them anymore. And I meant to say this going through the deck page, but I just like got all caught up. Again, I'm Plug and Prosper, and I'm going to, that's why I'm here to provide you guys value, but also like just let you know why we feel so passionate about, Prosper and who we are is our agents. We go through all of these coverages with the client. These clients are going to walk away, or get off the phone or get off the email or whatever, however it's being presented, knowing exactly what their policy covers, exactly what their deductibles are. So they feel really good about the decision they made to move forward with this policy. We're not just going to send it to them and be like, okay, here you go. This is your insurance. And then they're like, okay, cool. I see that number at the bottom. That's all I'm looking at. It's way more than your premium. It's, if something happens, am I going to be covered? Is my insurance company going to cover me? And am I going to have the money to pay the deductible to do it? So just things to keep in mind when, for you all looking at your insurance and your clients who you're sending them to for their insurance needs. Okay, auto declaration page. It's a lot long. It's a little bit longer. This is not something you need to turn into, your mortgage banker, loan officer for closing. This is just for you guys to know for your own awareness and education. So on this first page, it's going to list the first named insured, the policy holder. So whoever is like the named insured on the policy, it could be you, it could be your spouse, it could be both of you on there. For this one, it's me, and apparently I have a lot of vehicles. This is really not my. Oh no, it's not. Oh.
I think you might have shared just one.
Oh, okay. Thank you. Thank you. Uh-oh. Which one is it? Right here. Okay. Sorry, guys. All right. So, policyholder named insured. There we go. There's a little bit of a delay. Policyholder is the named insured. It's got your renewal date on here, an expiration date, your policy number, etc. The insurance company. And so then down here, it is showing the list of vehicles that I have insured on this policy and the premium per vehicle. Vehicles are going to have different premiums based on the year of the vehicle, the make of the vehicle. And I'm going to talk about some things to be aware of as far as rising costs for auto insurance as well. So it's going to list your vehicle, the year, make, and model right here, and the policy coverage summary just specifically for those vehicles. Now, these are like 20, you see a 2012 and a 2020 and a 2018. I'm going to say like 2018 up until now going forward, the policy premiums are going to be higher. And that is because they've added a lot more bells and whistles to vehicles now. You've got your rear camera. I've got a camera on my right side rear view mirror for blind spots. Self-driving vehicles. I mean, just all the new advanced technology. It's not cheap. And in order to access and repair it, they're removing panels and, all kinds of stuff. So the premium to insure these vehicles, it's going to be going up. And that is why, because
so to play devil's advocate, doesn't that also make the car safer?
It does make the car safer, but it is about going in and like fixing it too. So
yeah, that's like my refrigerator. I mean, it's the same thing as my refrigerator. I have like this fancy ice maker. Ice maker stops working it's $700 to fix it because you have to change out the entire computer.
Yeah. Yeah. It makes the car safer. That is true. But if they have to go in and, repair damage, it's going to be a lot more expensive to cover it.
I used to work in an auto glass shop down the street actually, and if it doesn't have those fancy systems in it, then it's like $200 or something. There's actually deductible of $0 down glass replacement deductible.
Yeah.
which I definitely buy because it'll save you a lot of money. But if you have to recalibrate it and stuff, like it's a whole entire day's worth of stuff, and it's going through several different people just to do that one thing for one windshield. So that would cost like $2,000. Or if you don't have it, it'll be like maybe 200 if you go somewhere good, low price auto glass. Or not safe like yeah, like $200 to $400 usually. But any of those systems, so yours would be like $2,000.
Right. Exactly.
Minimum. So if you
Yeah.
have a $0 glass deductible, then you just call up your insurance and then
Yes.
$0. So-
Exactly.
And it costs maybe $5 per month.
Yeah. And we're going to get into that in a minute on deductibles, but that is a great thing to keep in mind. Yeah. Yeah.
It's like, come on. I know one time you want to.
It makes a big difference. Sometimes it'll list the different discounts you have on your policy. So maybe you've been accident free for the last, couple of years. Bundling discount, the biggest discount you can have on your home and on your auto policy, putting them with the same carrier. That's where you're going to save the most money. And it just makes sense to have it with the same company. And they're less likely to cancel insurance for you too, if you have both home and auto with it.
I knew that somebody that I think it was Safe Flighter who replaced my glass last. He said that the new cars now that have all the technology, like she was saying, he was saying that they cannot come to you to replace your glass now either. That they have to you have to bring it.
Oh yeah, because it's a whole
Because
thing.
it's like a lot.
It's like surgery.
Calibrated stuff that
Goes
she- But that was, that's just more inconvenience, I guess, because we're so used to them coming to our house or our job to replace our windshield. But if you have these newer cars, like obviously the Mercedes and BMWs, all these really nice cars that have all this crazy technology, and even the Fords, they have them now, right?
They're expensive.
My
Yeah.
Hyundai has
That's what
a
I'm,
great,
Yeah.
yeah.
One of these, okay, we're gonna talk about this after, but is this minority report level where you're enhancing street sign? What is going on with your auto, your windshield?
Well, like
Is that-
Fair enough. That's a great question and a great analogy.
Yeah, some of the Cadillacs have that.
Yeah.
The higher-
I have not seen that yet.
I'll bring you my.
Oh
car.
my
That display.
I just want to say how much I love my base level that doesn't even have cruise control right now.
Just go to the Cadillac dealership, borrow the line.
Yeah. Other discounts and these are smaller ones like anti-theft. That's like if you have a little security thing on your car. And then new car discount. If it is a brand new car, you'll get a discount for that as well.
Okay, that actually reminds me for home insurance policies, do security systems
Yep.
help you quite a bit?
Like 3%. Look, every little bit helps. Every little bit helps, but yes, you can. They'll ask, do you have a security system? And depending on the carrier and depending on the type of security system, they might want to see a certificate, but absolutely. Yeah. All right, so then we're going down here and it's showing the name of the drivers. That is not me. That's not my birthday. So then it's going to break down all of the autos that you have insured and what the limit of liabilities are. So this first one that you see is bodily injury liability per person and then bodily injury liability per accident. So that's what they will pay per person in your vehicle that is injured. But the most that they will pay per accident is this much. Oh, this much. So on this one, he's got it set high at $1 million limit of liability. Umbrella policy, when we get down to the liability, well, I'll talk about that when we get down to liability. Property damage liability per occurrence. So any damage to the vehicle itself, the property damage, $1 million. Again, these are going up in cost because cars cost more to repair replace stuff. Comprehensive deductible versus collision deductible. So comprehensive deductible is any type of deductible where your car is not moving and it is damaged. So a tree falls on it. I lost a car in a flood once. I lived in Willoughby Spit at the time. It was the nor'easter of '09 and it flooded out my car. And I had a $0 comp deductible. So I didn't have to pay anything and they replaced my car. The only moving vehicle where accident or incident that would fall under comp is hitting a deer. I'm pretty sure that is correct. An animal. Isn't that right?
I don't know.
I think it is. From what I remember from being in insurance, is an animal would not be considered collision.
Yeah, yeah.
Okay, I'm right.
Here's the problem with that. I have one complaint. Instinct is
To veer.
once you veer your collision, that's a whole. different
Then
story.
that's collision, right? But if you hit the deer and there's damage, it falls under comprehensive. If you miss the deer and hit the tail, the whatever, the light pole,
On the tree.
collision or the tree, yes.
Okay, I'm really not trying to be argumentative.
No,
but
it's okay.
What if the deer hits you?
Yep,
Because
that's
that
comp.
happens.
That's also comp. So it falls under the same thing. They both, oh, I know. That deer will run right into the side of your car.
No.
They give 0 Fs. Okay. They're like, you're in my way.
Stop, and then it ran.
Yeah. Yep. So same thing, comprehensive. That, yeah. Well, she's from Murfreesboro. That happens over there. Yeah.
We have a lot of, we have a lot of woods.
Yeah.
And we have deer signs, of course, I'm being in the city, I'm like, oh my God, but you can see them walk a corner.
Yeah.
Stop.
Yeah. No, cows, where I'm from, cows, deer, all the farm animals. It's a thing. It's a thing. So that would,
My
that's
neighbor's donkey's got out
your
one
dog.
day.
Oh my, a donkey. Jesus. What an ass. Dad jokes all day. So comprehensive, anything where your vehicle is not moving except if you hit an animal, whether that's a deer, a donkey, whatever, or the deer hits you. Collision, so that's when you are driving in your car and you run into something or another vehicle. That's where the collision deductible comes in. And we typically, they do a lower comprehensive deductible. So as you see on here, that comp deductible is $250 because it's more likely that something like that is going to happen more frequently than a collision. And I know that seems counterintuitive, but it's true. The glass deductible would fall under comp, but as Alex just mentioned, you can have a 0 glass deductible. And again, it's like $5 to where, let's say you're driving down the highway and a rock hits your windshield and cracks it, and then you need to get your windshield replaced. You don't have to pay a deductible for that. It's $0 deductible. I've had to do it before. It's really nice to have for that extra like $5 a month, a 0 glass deductible. Collision deductible. So this one in this case is a little bit higher, 1,000. A lot of times you'll see 250, 500. So 250 for the comp, 500 for the collision, based again on the insured. If they've got, extra money, then maybe they do a 500 comp and a 1,000 collision, because having the higher deductibles does lower the overall premium. But that's what you have to pay out of pocket if you get into an accident. Transportation expense, also known as like rental reimbursement. Your vehicle is in the shop being repaired. You've got this amount, $2,500. Sometimes it's $900, depending on the coverages that you want. That will cover you having a rental vehicle while yours is being repaired or you're waiting to buy a new one. The uninsured and underinsured bodily injury and accidents. So that's always going to match your regular bodily injury liability per person and per accident. This is to cover you if you are hit by another driver that either has no insurance or has low insurance standards, or like the state minimum requirements, which is like 25,000 bodily injury, 50,000 per accident. That's barely enough. I mean, that's the state minimums. That's not the Prosper standards. We do higher, again, because it's about, making sure our customers are appropriately covered. Other insurance companies don't care about that. And so your insurance will come in and cover either the remaining what their insurance policy couldn't cover, or if they have none, then will cover it. If you suffer a hit and run, that's when that would come into play. Your car's parked on the side. I live in Ghent. The streets are so narrow. I mean, I'm fortunate I have a driveway. I drive down Princess Anne. There is a car sitting right on there right now. Someone hit it. The tires all like mashed in, the back smashed in, hit and run. That's where the underinsured, someone hits you in a parking lot and drives away. That's where that comes into play as well. Your medical expenses. So any type of like medical expenses per person that you have to pay, that's added to this policy. As you can see, it's not a whole lot, like $42. Income loss benefit. If you're in an accident and you're unable to work for a specific amount of time, they will pay you, up to $100 per week per person for up to 52 weeks. And scrolling down, the deductibles for the underinsured is the same thing. And then it's just going to go through all the different vehicles, and all the coverages typically is going to be the same for the vehicles. The only time it might not be, and I know he had an older car listed on here. Let me, 20. I'm sorry. If it's paid in full. Oh, exactly. Right. So if you own the car outright and it's not financed, you could just have the what's it called? Liability coverage only on the vehicle. That's going to cover you if you hit someone, but it's not going to provide you coverage if well, wait a minute. Yeah, just the bodily injury. Yeah, it's not going to do anything else. So we don't always like to recommend that unless it's a vehicle that's like sitting at your house and you're not driving a lot. The umbrella insurance policy, and we'll talk about that another time, that's always going to follow an auto policy. So in order to have an umbrella policy with a provider, you need to have your auto insurance with them. And again, that just adds liability limits over and above what the policy has max wise.
I will say this, I'm glad you guys don't necessarily recommend the actual
state minimum.
Because if you get in an accident and it's your fault, you have to pay
out of pocket. What? Right, exactly. Right. If your policy, if you get into an accident, it's your fault, your policy is paying for that other person's, bodily injury, property damage, whatever your policy doesn't cover, you have to pay for that. That's coming out of your pocket. That's why we recommend higher limits of liability. Also, having that umbrella policy too, especially, if you're someone like a medical professional and you're in the real estate profession, people might assume that you have a lot of money, and we live in a litigious society. They could try to sue you. So anyway, that umbrella policy another day. Any questions about the auto deck pages? And one thing I just want to kind of touch on here is, if you all want to, we're happy to sit down, like Alex or me, or connect you with an agent, and you want someone to look over your current home and auto insurance policies and your deck pages with you. We're happy to do that for you, and even like run a quote. Maybe we could save you some money. Maybe we don't, but just a service that we'll provide if you just want to, understand your policy a little more. and, you know, see if you can get a better policy. So let me know and we can connect you with an agent in order to do that. And that's all I've got. Any questions? No, I hope this was informative.
Yes, very much so.
Good.
Very, very informative. And y'all, like, there's no words for the value that Sarah and Alex provide to our office.
Thank you.
You know, I call them and Sarah answers immediately, Alex as well. And like, hey, my client is tight on budget and we're looking at this house that they love, but it's in a flood zone. What does that look like? And will we be able to make all of that work? And
Yeah.
they'll get me an answer like within an hour,
Yeah.
like while we're still at the property.
Good. Thank you. We try to, because we know like it can make or break a deal, especially right now. And text me on a weekend. I do flood zone. I can do that. I can do flood zone determinations and run a quick quote if they're in a high risk flood zone on a weekend for you. If I'm at home at my computer, if I'm not, I'll let you know I'm here. I'll be home then. But I do that all the time. So
Yeah,
happy to help.
She's also like talked to my clients, like especially when FEMA was redrawing their flood maps
Yeah.
and like all of a sudden we weren't going to need elevation certificates and whatnot.
Mhm.
I had a couple people who were really nervous about that, and she talked to me and talked them off the ledge and was like, "Nope, look, it's fine because of X, Y, and Z," and was able to provide just a lot of knowledge.
Oh, good. I'm glad. Thanks, Jordan. Making me feel good this morning, even the warm and fuzzies. All right. Well, for those of y'all that tuned in via Zoom, thank you. Hope you learned something. I hope you should all have my contact information. Reach out to me if you have any questions and we'll set up another one to go through flood deck pages, flood policies. That'll be really huge. And even like umbrella. And if we can think of anything else, if there's anything you guys want to learn about or hear about insurance wise, let me know. I want to be able to educate you all on what you want to know and tailor it to you all. So just something to think about. And if you have any ideas or something specific you want me to talk about, Craig, and same goes for you on the insurance side, just, let us know. And have a good day, guys. Thank you.
Thank you.
Thank you.
Oh, thank you. You're welcome. Bye. All right. Cool.